Good evening, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. And in today's video, keep in mind all of the options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. Why do I enjoy writing puts so much, and why do I devote 80% of all my trading capital to this strategy? 3 simple reasons. Number 1, if you're a beginner, it's very easy to understand and apply and scale. So you can scale it up or down depending on the size of your account. Number 2, very low time management. If you have a full-time job, you're traveling, or you just have other engagements, you only need to spend really about 15-20 minutes a day to find the plays, set them in motion, and then let them ride throughout the rest of the week. Very low time management strategy. And number 3, reason why I love writing puts is because of the consistency and the very high win rate. If you do respect most of the strategy rules that I will outlay in this video, your hit rate and your win rate will be very, very high. That's because we sell these options far under the market and the likelihood of being assigned is quite low. So in today's video, guys, we're going to look at a few things together. Number 1, of course, we have to set the tone for the week. What are we possibly going to be expecting? We had a very big day of declines on the Sunday, or rather on the Friday, excuse me. It's Sunday now. I was looking at the futures. You can see the Sunday futures are a little bit in the green, but we know that possibly the table has been set and the wheels are in motion, potentially for some declines midway through the week if the jobs data narrative continues throughout the rest of the week. So we will set the expectations for the week. Where can the markets likely end up? Possibly to the downside, and derive some possible levels of interest both on the S&P, the QQQs, and how that might play into some different plays, as well as many other factors such as earnings and macro catalysts that we have this week. So we'll spend 5 minutes kind of deriving what we can expect for the week. Thereafter, I'll take you guys through these strategy rules. We'll do a very brief recap of the strategy rules, because when you're in a period of a market sell-off with a narrative that could last for more than one day, it's very important to respect the strategy rules, not get too greedy, and be very patient. So we'll do a quick recap of the rules. Then after that, of course, we'll get into the top 5 options plays of the week. And as per usual, I have about 10, 11 bonus plays for you at the end of the video. So make sure you stick around. That being said, should be a very fun video. Let's jump right into the action. So in terms of aspect number 1, setting the tone for the entire week. Well, obviously, we know what happened last Friday. It's no secret. You guys are probably all very well versed on what happened. It's the fact that the jobs market was a little bit weaker than expected, only coming in with 73,000 jobs. The expectation was for 100K, but that was not the biggest pain point. The pain point was the revisions to the May and June data overall, revising the amount of new jobs in the economy down by 258,000 jobs, which showed much weaker performance in terms of adding jobs to the economy, and sent the media and analysts into this, spiraling narrative that this is a game changer report. The labor market is deteriorating quickly. Well, we actually kind of debunked this just the other day, yesterday, in my video that I posted on the channel, saying that, the labor market's actually not too bad. Are people losing their jobs by the millions? The answer is no. The unemployment rate is still relatively close to historic lows. And additionally, are there currently still jobs available in the economy for people looking for work? Matter of fact, yeah, we got that data early on in the week when we showed that there was about 7.5 million jobs still to be had in the economy. But of course, the aspect of we are adding less jobs than before is going to be front and center and is a narrative that the media can run with. And as a result, because of the fact that we know that the Fed has been very, very patient in decreasing interest rates, well, we don't really have a catalyst to fix this, right? To stimulate the jobs market, which would be cutting interest rates. That may only come in the month of September. The month of September, now the probabilities of a cut stand at about 90% in relation to this most recent jobs report that we had. Prior in the week, when Jerome Powell was speaking, it went down to about 45%, saying that he was going to be patient, wait for the data. Well, now they probably have the data that they need to cut rates in September, but you won't get that before the month of September. And additionally, you do have very weak seasonality coming into the indexes here into the fall. Keeping in mind that we are also coming out of SPY overbought conditions. We've been rallying in the markets for about 4 or 5 weeks in a row. All things point to the fact that maybe the month of August and even early September can be a bit of a bumpy ride. I'm not calling for a crash. I'm not calling for a recession, not even close. We know that the bulls control the higher time frames here. The weekly charts are in full control, and even the monthly charts right here too. Beautiful V shape off the tariff lows, but After 3, almost 4 months of nothing but upside and no bearish catalysts, when you do get a bearish catalyst, especially one of the nature of the jobs report, well, it can lead into a bit more weakness overall in the markets. Keep that in mind. I was also showing you guys yesterday the smart money and dumb money confidence. This is just basically institutions versus retail. We know that institutions are notorious for selling their bags to retail. You can see that during the overall tariff sell-off. What were the institutions doing when the market was crashing? They were buying, 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 buying. And thereafter, when the market started recovering, well, they were obviously offloading their positions into the hands of retail, which just could not get enough of buying the dip. Pure FOMO almost the entire way. And now it's the opposite. Retail is kind of stuttering right here, dumping some of their bags, dumping some of their profits, taking this narrative pretty much a bit too seriously, in my opinion. And who is sitting there to possibly buy the dip? Well, of course, institutions that have very much buying power to go for. But it's very tough to predict what will be the extent of the sell-off, where it's going to stop. So all we can do is be patient, take things 1 week at a time. With the increase in volatility, though, talking about the increase in the VIX, what this allows us to do as people who sell put options, it allows us to get some really good distance on the strikes. You'll notice that premiums have been going higher, right, in relation to the move up in the VIX, but that does not mean that we have to place stocks super close to the market price, thinking that this is the end of the dip. No, no, no. You want to be writing them far away from the markets. Now, in terms of where we stand, the next support area for the SPY is down here at about 610 all the way to about 600, this 10-point range. Prior all-time high resistance should be newfound support for the bulls and could support us in the event we come down into there. This yellow line right here is the expected move for the week, 611.86. That is just about 1.5% to the downside. Of course, it can go more, it can go a bit less, but if things really hit the fan, guys, just understand that into our support area, you would be below the expected move. You probably are going to get some buyers. We're probably not just going to collapse through this area this week as if it's not even there, but could we make maybe a movement like this where we two-step the process and go into further weekly consolidation over the next 1 to 2 weeks? Yes, as a matter of fact, I am somewhat expecting that. It's a question of you hope for the best, but you always are positioned for the worst. So be very patient, identify your levels, and go shopping methodically, right? Not everything at once. The QQQs have an expected move right here of about 543.88 from the current price right now. That is a decline of roughly 1.7%, so keep that in mind. If we go below that, it's a good thing. We have tons of resistance, which is now support for the bulls. Your weekly EMAs are also there, and you would just be looking for a casual weekly higher low, cool off some of the lower time frames here. You can see we have just went from overbought conditions, which we were in for a better part of the last 3 months, and in one single day, guys, we've cooled that off. So you probably will find some buyers in this location, but it's just tough to predict where we're going to end up at the end of the week, whether or not the narrative runs hot and we just further decline, or whether or not we are able to save a little bit of this Monday and Tuesday and then roll over. I'm just predicting for an overall, bumpy period of time over the next, call it 3, 4, 5, 6 weeks until we make our way into the next Fed meeting. Because right now, we just have to look at things objectively, right? Is the sky as clear as it was before the jobs report? Meaning, do the bulls have it in them to just push beyond new all-time highs as if there are no concerns in the world, similar to what we had a few days ago? No, we know that since Friday, we have a few things. The jobs showed relative weakness, and we also have the new effective tariff rates. So we definitely have a lot of firepower, a lot of fuel to run with the narrative that the tariffs are going to start impacting inflation numbers, the jobs numbers are weak, the Fed's going to have to step in. As a result, the environment right now is cloudy. It's not anymore a blue sky breakout where there are no concerns. So just prepare yourselves in the event that the markets are a little bit more bumpy than they may have been over the course of the past 6, 7, 8 weeks on this phenomenal rally. And I'll remind you, if we do consolidate, guys, we are just looking for the longer time frame higher lows, monthly higher lows. Would it look so awkward if we just pull back the month of August into previous highs, get close to this 12 EMA, consolidate, and then have a beautiful rally into Q4, which is seasonally one of the best periods of time for the markets? No, it would not. So prepare accordingly, especially if you are trading. Respect your levels, don't get too greedy, and definitely don't deploy all the money at once. Those are just some tips and tricks that you guys will be able to follow along with. In terms of macro events this week, guys, there's really not too much. All of the stuff was last week. This week is actually pretty light. Matter of fact, the only big one we get is on the Tuesday session, ISM Services PMI. I'm not expecting to see some crazy inflation numbers here, but that's going to be the only one that the market's probably going to pay attention to. In terms of earnings, well, we are largely through our earnings season. I mean, we're getting to the tail end of it. Last week was the biggest week of them all. This week still our third biggest week of the earnings season. And you can see there's no companies with crazy market caps on this list. I mean, we have Palantir, we have AMD, we have Uber, we have Shopify and things like that. So a lot of some of the growth companies, but overall, I would assume that Eli Lilly and Berkshire Hathaway are probably the largest companies by market cap on this entire list. No more large, big tech names overall. So you can see some plays all throughout, but we are not going to try and play some of these earnings before. If you find some dips after earnings, which you wouldn't be surprised with, right? Because we've been having many dips after earnings, even if companies report good earnings. A lot of them have gone lower. So keep that in mind. Do not try and play these companies prior to earnings. You guys have seen what's happened. Unless they have blowout quarters, their share price can come down. But maybe, just maybe, after earnings, especially with a heightened VIX, you might be able to get some really decent strike prices selling puts under the market. So please keep that in mind. That is your preview for the week overall, guys. I think it's going to be a question of price action and the jobs narrative, right? We don't really have any earnings that can move the market in a substantial way. We don't really have any macro that's going to move the market in a substantial way, but we do have a narrative of profit taking and a quote unquote weakening economy and quote unquote weakening jobs market to contend with. As a result, the bias could just be to the downside, even if there are no more actual macro reports that come out this week that make things worse. So please keep that in mind, right? Now, that being said, that's everything for your market preview. Hopefully that makes sense. In terms of the strategy rules, now I won't be going over these strategy rules one by one. I will leave a video in the description. Please watch it if you don't know these rules. It's about 10 minutes, guys. I'll leave it down below in the video description, right? Watch the video, the strategy rules. I go through these one by one. Number one, the only thing that I will reiterate, especially in a time of market consolidation, if you are selling puts in the market, it means you are agreeing to buy shares at that price. Please, please, please do it on high quality companies and high conviction companies only. When you are in a phase of market consolidation, it is essential to consolidate our holdings into our highest conviction companies. Because if you sell a put option and you get assigned the shares, well, you're going to have to hold those shares and then run covered calls on the position until you are able to get out. Not bad, but if you are ever holding something that you don't actually want, that you only played for the volatility, or you made some sort of play trying to play a company on earnings and it goes down 10, 15%, you're not going to have a good time. So please respect these strategy rules. Be very careful this week, guys. Do not sell any put options on companies that have earnings this week. And also, please focus on your highest quality and highest conviction companies. I'm all for buying the dips, and short puts are a fashion of buying the dips. All it is a buy limit order under the market to pay you, right? That's essentially the moral of the story here. You are selling a put option under the market, and if it closes below there on Friday, you have to buy the shares. If it doesn't close below there on Friday, you just get to keep the premium on the option. So if you do get assigned, just make sure that you are getting assigned on the highest quality companies. That way you guys can manage the position and you don't start getting nervous or anxious surrounding those trades, right? So I'll pretty much leave it at that just to be time efficient on today's video. But if you are not familiar, if it's your first time on the channel, if you're not familiar with this strategy, please go watch the video down below, especially on a week like this, especially into index consolidation phases, right? You really want to be diligent on respecting the strategy rules. Now that we've taken care of that, let's dive into the top 5 options plays for the week, shall we? So play number 1 is a company that I have not been able to play in a few weeks, and I'm excited that I get to play it again, and that is going to be Apple. So the last time we were playing Apple on the channel, guys, was all the way back here in the month of June, early July at the most. But since they've kind of rallied towards the highs, extended from the support, the VIX was low, we could not play Apple anymore. But I'm very happy to say now we can play it once again. So Apple, we covered their earnings on the channel last week. They had pretty good earnings. Matter of fact, the best earnings that they've had, I mean, since I've covered on the channel, arguably in the last 3 years. So great revenue growth for their iPhone 16 batch. And overall, the market was fairly accepting of those earnings. Unfortunately, the stock came down in the intraday session on the Friday, but it doesn't take away from the fact that they have very solid earnings and they had pretty decent numbers here, probably into the rest of the year as well. As a result, I will want to play Apple because we are coming into some of the tariff support levels that were previously established from April all the way through June. So I do want to play Apple stock down here. I think the risk to reward is fairly manageable right now. That being said, the expected move on Apple is 196.4. So traditional to our fashion, let's go shopping on Apple and see, can we find some good put options below the expected move? By the way, if you don't know where to find the expected move, you can go on this website right here, barchart.com. Just type it into Google, barchart.com, expected move, Apple, and look for the lower bound of the expected move on a weekly basis. Here you can see, I'll pull it up. Give me a second here, pull up Apple. You'll see the lower bound of the expected move is right down there. So make sure when you are trying to sell put options, try to get below the expected move, right? So you put all the odds in your favor of not being a sign, right? So nice decline. And we also are soon to be in daily oversold condition. So we know a couple more days of red, perhaps on Apple, will put us into daily oversold conditions, into a nice support level. And those are all conditions that, kind of point to the fact that we should possibly be looking to position on this name. So Apple looking below the expected move. The expected move, I'll remind you, is 196.4. Let's look below that, and we'll be looking for 0.5%. So 0.5% is the amount of money we want to make per week. Don't be too greedy, getting too close. Your chances of assignment will be very high. Also, we don't want to go too far away because then we're not making enough money for our capital. The sweet spot that I've derived over the past, 6, 7, 8 years of running this strategy is the 0.5% rule. And if you don't know how to find it very quickly without breaking out the calculator or anything, divide the strike price by 2 in your head. And that should be the amount of money you're looking for on the bid, right? So half of roughly 200 should be about 100. So you'd be looking for roughly $1. So if we're looking under the expected move of 196.40, you can see the 195 strike for Friday is actually paying $1.11. This trade, as a result, would make perfect sense and would provide decent ROI. However, if Apple drops again on the Monday session, what you'll want to do is you're going to want to get as deep as possible into the support range. If Apple drops another 1% on the Monday session, I'll be looking one strike lower at the 192.5. I'll be trying to find, once again, close to 95 cents to $1 for those. So for me, at a first glance, the two strikes that I enjoy right now, 195 and 192.5. The one thing you do not want to do is if Apple has a 3% rally on Monday. I know it's not very likely, but I'm just painting the picture here. If it has a big rally, don't start chasing these guys. There's many names that will be red over the next few weeks, in my humble opinion. No need to chase the markets. So if Apple opens roughly flat or red, I'll be choosing to go for the 195 or the 192.5 strikes, targeting the lower end of our support range. That's stock number one. Stock number two is Amazon, another company that I have not been able to play in a couple months. As a matter of fact, since the late stages of the month of June. Amazon had fantastic earnings on the Thursday session. Unfortunately, similar to many other companies so far this earnings season, Wall Street just wasn't having it. They sold the stock down 8.3%. It is what it is, but they showed extremely solid AWS growth. Even though people are saying, well, why is it not as good as Google? Why is it not as good as Microsoft? Well, because they're the market leader, guys. It's the law of large numbers, right? They're 65% bigger than the closest competitor, which is Microsoft Azure. So you can't expect too much for them. In terms of only looking at Amazon, this was actually very, very solid growth. So keep that in mind. I'm a big fan of playing Amazon. The valuation down here, in around the mid 200 range, talking about like two teens, like 215, 210, is not that bad at all. You're trading at a mid 30 price to earnings. The PEG ratio is a lot more manageable than it was up here at the 230 range. I want to be playing this pullback because I understand that the longer term bulls are indeed in control. We had 4 months of glorious rallies, just looking for a monthly high or low for possible further trend continuation. As a result, during this pullback, I want to play this stock as much as humanly possible. The expected move for this week, guys, is 208.52. Now, you'll notice that we're not very close to our support range. The actual support range, the bigger one at least, is down here at 200. However, if I can start positioning a little bit early around the 200-day EMA, 205 and under, I'm happy with that. And I'll kind of take the position from there. I mean, from there to possibly our tentative assignment point, you'd be talking about 13% from local highs. That's a very decent discount, and it puts you back into May pricing. So the expected move on Amazon for the week is 208. 0.52. Let's go shopping on Amazon to see where can we possibly find some trades for Amazon using the wheel strategy. So you'll see, once again, similar to Apple, right? Where's the 0.5% rule? Half of 205 is roughly 100, 102. You'd be looking for $1 on the bid. Sadly, at 205, there's nothing there. But 207.50, which is under the expected move, matter of fact, is providing some good premium. However, this strike is good right now, but if Amazon continues its momentum slide to the downside, and once again on Monday, it drops 1%, or on Tuesday as well, and drops down to 210, 211, 209 even, couple of percentage points more, well, what do you think is going to happen, guys? Well, for sure, we are going to get some opportunities to play these 205s. Pay attention, look for $1 at the bid, and that trade will be live for me. So at a first glance, 207.50 is not a bad strike, but if I want to be a little bit more patient, 205. And of course, if Amazon has a 2% red day on Monday from some earnings follow through, maybe, just maybe, you can get the 202.50s. Pay attention to those as well. As always, you want to be going as low as possible while still getting your designated ROI. That's play number 2. Very excited to be able to play Amazon. I have not been able to play Amazon with the wheel for like a month and a half, and now I will be playing it in a fairly aggressive fashion all throughout this consolidation, because I do believe in the event we get maximum drawdown, we're probably just going right back there to our support level, call it 200, down about 190. So I'll be playing this lower bound right there. That's play number 2. Play number 3 is Micron. So Micron had a tremendous rally coming out of the tariff fear lows, and now we're kind of normalizing the price action a little bit, looking for the weekly higher low, anything above 91, looking for a higher low, and look at all this gorgeous support that is previous resistance. It is now support. I know the bears are in short-term control of this chart, but just keep in mind, when in doubt, zoom out, guys. Who controls this, right? This is a monthly downtrend, fully engulfing move, and now looking to just normalize for a higher low and possibly go for further appreciation once you are through a bit of a correction period in time we are for Micron. They had fantastic earnings. We covered them about a month ago on the channel. Look at the valuation of Micron down here in around the lower $100 range. You're talking about a forward price to earnings of 14, a PEG ratio of 0.53, and a price to sales of 3, when the industry of semiconductors is trading at an average of 14. That's good value in my humble opinion. Couple that with this massive support range that we're coming into right now. Couple that as well with short-term, almost daily oversold conditions into the 200-day EMA. All factors of confluence that lead me to believe that this could be a very decent setup for some short puts. That being said, the expected move is 100.38. Let's go shopping on Micron to see, can we get something below 100? And the volatility on this one is quite good, guys. You'd be surprised how much lower than 100 you can get. At 100, if you're looking for 0.5%, guys, half of 100 is roughly 50. So you'll be looking for 50 cents on the bid. Perfect. There, that's the 0.5% rule. It's about a 12 delta for those of you that follow delta. So 97 strike at a first glance, that would be the one that I'd be interested in, right? It's below some of our support range. It's below the 200-day EMA. You get down there, you'll be daily oversold as well, and represents a very decent risk-to-reward trade-off in my humble opinion. So for Micron, for me, I'll be looking for 97, but you guys know the drill. If Micron has another day of 2% to the downside on Monday or Tuesday morning, bringing us lower and lower, well, what do you think is going to happen, right? The premium at the 97s is going to move down maybe to the 96, 95. So for me, this week is going to be 97 to 95 on Micron, trying to get as low as I possibly can under that support range, counting on our long-term bulls to have our backs. And if you ask me, do I mind being assigned here on Micron in the mid-90s? Not at all. The covered calls are going to be juicy, and we're eventually just going to be waiting for the bulls to kind of resume their course sometime over the next few weeks. Not a bad trade in my opinion. Stock number 4 is going to be SoFi. So SoFi, yes, I know they had their earnings. They were an absolute blowout quarter for SoFi. In terms of the valuation right now on SoFi, it's not too bad. Forward price to earnings is expensive, but they are growing EPS at a fantastic clip on a year-over-year basis. Gives them a PEG ratio of 1.35 at 21 bucks. That's not too bad. However, we can notice that the bulls might be getting a little bit tired here. They tried the resistance range, 24.5 to 22 a couple times after earnings, and sadly didn't make it. In the event that SoFi unwinds with the rest of the market this week, and we go into some form of weekly consolidation, I want to be playing these pullbacks, and no, I will not be greedy as waiting for 16 before positioning. I'll kind of want to play it midway. If I can find some 18 strikes, and I have been able to find some 18 strikes every time SoFi drops 5, 6, 7% early on in the morning with that volatility, I can find some 18.5s or 18 strikes all day. The way that I would structure this trade is not go all in at 18 or 1850. I would two-step the process. If my total contract size that I can do on SoFi is 10 contracts, maybe I start playing 5 here. And then if we actually do come down into that price, maybe then I structure 5 more contracts down there and play the dip as it's happening, right? The long-term bulls are fully in control of this chart. It's a very nice monthly uptrend overall. It's almost vertical, but we do eventually have to have some pullbacks, even in great names such as SoFi. You can clearly tell by this weekly candle close that you would not be surprised if we do get a bit of a consolidation period after that earnings bullishness. And in the last, 6, 7 weeks, how much are we up? Almost 100%. If it consolidates, nobody would be surprised. The expected move for the week, guys, is $20, 20.04 to be exact. Let's take a look on SoFi. Can we get those infamous 18 strikes that I've been getting for the past few days? Let's have a look. Where's the 0.5% rule? Well, half of 18 roughly is about 9-10 cents. As you can see, it's not there yet. That's at 19. However, one more day of red or some early morning volatility on Monday, if you come down another 3, 4, 5% into the expected move into 20, well, take a look, guys. You might just find what you're looking for here. 18.5 to 18. Look for about 9-10 cents on the bid right there. I would not be opposed to doing a couple contracts of SoFi, just looking to play that pullback. And in the event it pulls back and we somehow get a sign this week, keep in mind, that would be a hell of a pullback, you know? That would be like a 15% pullback intra-week. Not impossible. There is always a possibility. In the event we get assigned, well, my next location to sell more contracts and build a position would be down here at 16. So it's a bit of a hybrid trade that I'm giving this to you guys. It's not close to support, but I do want to play. But there's a way to do that. You split it up in two. You say, okay, I want to play here, but not with everything, because I know that the SPY and the QQQ may be heading into weekly consolidation, seasonal weakness, and a jobs narrative right now. So I want to play the pullback, but maybe I save a little bit of buying power in the event that we truly get the big unwind, which takes a couple weeks. So keep that in mind. That's play number 4. And play number 5 is a very easy one. It's Bank of America. So Bank of America needs no introduction. Very solid company. We covered their earnings after it happened just about a month ago at this current time. But the banks as well, from the bottom to the top of the rally, 47%. Usually, guys, banks do not rally that hard. So when in doubt, zoom out. You're looking for a monthly higher low. You know that you have a bunch of support back here, support that was established prior to the tariff sell-off. It was support for the markets there, resistance as well. It's the closest level that we have. We have the 12-monthly EMA as well. We're just expecting a higher low into possibly trend continuation as the banks consolidate from their massive rallies. So just keep that in mind. Looking for a weekly downtrend perhaps. That being said, the volatility on the banks right now is quite good. Bank of America was down 3.41 on the Friday session. And you can see, right, if we get a couple more days like this, we're going to get into ever so rare daily oversold conditions for the banks. This does not happen that often, but when we do get into daily oversold, normally it's a good time to be picking some of those dips up in the market. And the 200-day EMA is right down there, 43.56. The overall support range, 44.25, let's call it, down to 42.5. So I want to be playing this range of pullback for Bank of America. It does a good job of complementing all the growth stocks that you guys may have in your portfolio. So the expected move for the week is 44.43. Let's go see what we can get on Bank of America for the Friday session, right? So Bank of America, we want to get something below 44.5. Let's go see what we can get, preferably deep into the support range. And if we're looking for 0.5% on a $40-something strike, you'd be looking for about 22 cents, right? So you can see right here, the 43.5s are almost ready. They're paying 18 to 20 cents. A little bit more, a little bit of a nudge lower on Bank of America into the Monday session. That'll probably do it. Look for the 43.5 strikes or maybe even the 43s. If Bank of America and the banks fall another 1 to 2%, perfect. I'll be able to write the 43 strikes. But I'm not even opposed to doing the 43.5s. It's at the 200 EMA, it's in a support, and that will be a nice pullback from the recent highs, guys. You'd be talking about a 10 to 12% pullback on the banks, which is pretty good in my humble opinion. So just another play to kind of complement all the other growth stocks that that I've been giving so far, decent one. Whenever I can play the banks, which is not that often, you usually need an increase in volatility with an expansion of the VIX. I don't get to play them too often, but when they do come around, I figured that I should share the plays. Those are all the top 5 options plays for the week. Hopefully you enjoyed those. Now we're going to get into the 10 bonus plays. The bonus plays, it's not that they're not as good as the top 5 options plays. It's just that either they're more volatile than the top 5 or they're just not quite ready. We're going to break it down into 4 different sections. 4 growth stocks, 2 names for value investors. If you guys want to play the wheel on value names, I got 2 companies there. 2 small account plays for those of you that have smaller accounts but still want to run this strategy. And lastly, 2 plays for very large accounts for those of you that can afford to sell puts on companies with a $300, $400, $500+ share price, right? So let's get into those growth plays right now. So just to let you guys know, I won't be giving you guys the expected moves for each one of these plays. You guys are now professionals. You know how to find them. But what I will be giving you is the thesis for each trade and the levels that I'll be looking to go shopping in. So number 1 is the growth section. So company number 1 is going to be Palo Alto Networks. Very strong company. They had very strong earnings, but unfortunately they've been brought down because they're acquiring another company for $9 billion. So of course we had a bit of a pullback, but I love playing these pullbacks, especially into daily oversold conditions onto Palo Alto Networks, especially number 2 into a very large area of support. So looking quite good there. Palo Alto Networks, I'll be looking as deep as possible, trying to target the 160 strikes overall. The valuation is a bit expensive for these companies, but they are for all cybersecurity companies. I'll be looking for price action and daily oversold conditions to really give myself the best possible entry, somewhere around 160 or lower. I think the bulls are going to put a stop to some of this bleeding into support, and we might get a nice bounce before even getting a sign. So I'll be looking at this one front and center Monday morning. Company number 2, well, not a company, but an ETF, will be SOXL. Yes, the 3 times leverage bet on the SOX. So SOX is your semiconductor industry right here. And as you can see, first time we're having daily downtrending conditions and a loss of the 12 EMA. If you guys are recurring viewers from the weekly videos, you guys will notice that this time is different, right? We have not had a daily downtrend on the SOX in pretty much over 3 months, and we have not lost this 12 EMA, which is your short-term momentum guide. That being said, we're coming into beautiful, beautiful support. All of these guys from 2024, they will now all be acting as support, and the bulls are in control of semiconductors, but this is your lead bull. We're just looking for some consolidation. So I'll be looking to play the bottom end of the range. The bottom end of the range on the SOX is about 7-8%. Now, the good thing on SOXL is we can play this one with a great deal of distance. Take a look here. 7-8% on the SOX would be 3 times that on SOXL. You'd be looking for 20%. Can we even find some plays 20% lower on SOXL? Yes. I know some of you guys want to play this one very aggressively, and that's fine. But just take a look here, guys. Even 20% lower on the SOXL for a week is still giving you 0.5% at 17.5 and 18. I'll be looking to play the distance on this one and using my SOXX as the guide to establishing where I can play SOXL. For me this week, though, it's going to be roughly 18 out of 17 bucks. I would not be opposed to playing that region. If you guys want to play it more aggressively, that's up to you, but you can play these ones in a more safe manner. Company number 3 is going to be Google. So Google is just not quite ready yet. However, in the event that we come further down on Google as part of the big tech unwind, the growth trade unwind, as we move through SPY and QQQ consolidation, I want to play Google again, guys, down below 180. You'll notice that the big support range comes about 178, 177. I would not mind early positioning on Google 180, maybe 1 contract here and then a couple more contracts down there if you have the room. But be patient for this one. Wait for those strikes to free up. It is not ready quite yet, but if we see some early week declines on Google, daily downtrend into weekly consolidation, the bulls have a lot of space. They have the weekly uptrend. Consolidation is just normal. So keep an eye out for the 180 or sub 180 at some point throughout the week. You might be surprised at what you might get on Google. And the last one is going to be BITX. So BITX, guys, is Bitcoin, of course. Now, this one is not going to be suitable for everybody, but I figured I should throw it out there. BITX is the 2 times leverage version of Bitcoin. So we have to do the analysis based off of Bitcoin to begin with to give ourselves a good margin of safety on this trade, right? So you can see here that Bitcoin is currently in a very nice weekly uptrend, but we are in pullback mode. The daily bulls have lost this range right here. Downtrend, you would not be surprised for some continuation if it follows the rest of the market to the downside. you're just looking for a weekly high or low. And where better to set that than prior support? 107 down to about 100 is the range. Prior all-time high range of resistance should be a first touch area of support for the bulls. And as a result, the distance from here to there is 6 all the way down to about 10%. The range, right? The depth of the range. So BITX is 2 times that. Think 12 to 20%. 12 would put you down there at 50, and lower than that, 16%, right, would put you right down here at around the mid 40s. So essentially what I'm saying is 50 down to 40. 45 should be the target range for BITX, and you can actually get some premium there. The VIX expansion and the speed of the moves is freeing up some premium down there. Take a look at the $50 strike. You're getting almost 1% down there. Even down here at 45, you're getting almost 0.5%. So for me this week, it's going to be 50 to 45, giving myself some good distance if I want to play Bitcoin. Those are 4 different growth plays. Obviously, there's many more, but I figured I should throw those out there for you guys right now. Now, 2 value plays. Number 1, we got to talk about PayPal. PayPal had pretty decent earnings. This was another case of a company that had decent earnings. The market just was not having it. PayPal down 14% in just the last 5 trading days since their earnings, unwinding the entire move since the month of May in 5 days. However, with that speed comes possible daily oversold conditions, and where better to set daily oversold conditions than into our 2.5 years worth of a very large support range. So PayPal for me, I'll be looking as low as I can get. Low 60s for me, not a bad bet on PayPal. Their earnings were actually pretty good, guys. The valuation down here on PayPal is quite manageable. We covered it on the channel, if I can find it here. At 71, right? The valuation was already good. Around a 1 peg, 13.4 price to earnings, very cheap price to sales, great free cash flow yield. So it stands to argue in the low 60s, it's even better, and I would not mind playing this one. Second company has been one that I've been patiently waiting for this one to unwind. Take a look at Chipotle. The market really did not enjoy Chipotle's earnings at all. 13% down after earnings, and the slide continues just in the last week of trading, guys. From earnings, this stock is down almost 20%. But when you see a stock drop so fast, it should trigger daily oversold conditions, which it is. And, you know, occasionally you might be able to line up these daily oversold conditions with a very nice support area. How long does Chipotle usually stay daily oversold? Well, to the extent that they usually come down about here, right? This is the maximum level of daily oversold conditions that we've had on Chipotle since 2022. And every single one of those times has resulted in a decent location where the bulls tend to stop the bleeding a little bit. The support range is 40 down to about 37. So Chipotle for me, that is exactly where I'll be looking. A big unwind of this trade right now. If I can find some short puts here under 40, talking about 39 to 36, not a bad place to be playing Chipotle, all things considered. Now, those are the 2 value account names. Now, into the small account names real quick. So number 1 is going to be New Holdings, the Latin American fintech player, which has very strong fundamentals. At $12, the price to earnings on a forward basis is 21.4. They are growing EPS at a fantastic clip, and the forward peg ratio is very cheap. Anything under 1 for these growth companies is very cheap. Is the company struggling right now? No, not really. Very strong net margins, almost 20%. Is the company struggling for growth in the future? Not even close. EPS will be expanding at a very fast pace here. In the next 2 years, they'll 2x EPS. In the next 3 years, they're going to 3x EPS. And same thing for revenue. Currently sitting right now at $12 billion. By 2028, you're looking at $24 billion. Company's expanding well, but the market just has not rewarded this company at all. We are coming into a nice support area though, 12 down to 11.5. If I'm looking for short puts this week, 11.5 needs to be front and center, but maybe break the trade up into 2, right? Since we know it's been unfavorable and we can have some corrections, maybe I do some contracts here at 11.5, and then event you flush and go back to the tariff lows, $10.50, $10 would be a nice area to further build the position. It's been an area that's stopped the bears in their tracks many times since early 2024, but this is the midpoint level. I'll want to play a little bit of both. That's company number 1. Company number 2 is SentinelOne, a very strong cybersecurity company, but similar to other cybersecurity companies, they're just not profitable yet. They're doing a good job of trying to minimize expenses where they can, right? Compress the net margin loss as best as they can. Overall, though, guys, not a bad company. They're expanding EPS nicely. We're currently seeing a switch from non-GAAP unprofitable EPS to non-GAAP profitable EPS. And when this happens for growth companies, I tend to pay attention. The average analyst estimate is well above the current share price. And look at this revenue growth. Revenue growth is fine for this company, right? And it's actually not that bad in terms of valuation. That being said, it just has not been showed the same amount of love as other cybersecurity companies have, but that's okay. We can play it in the lower bound of the range. This is 3 years. 3 years worth of support, guys. So SentinelOne, $17 out of $15. I would not mind taking some plays. As a matter of fact, I do have some plays on SentinelOne. I'm sitting here at 17.5 for the week. Maybe you can get a better price than me if you keep dropping. They had a good pop here on the Palo Alto rumor of the buyout. It didn't happen. They don't have earnings anytime close. So, 17 out of 16 bucks. I wouldn't mind playing some small contracts on SentinelOne. That's it for your small accounts. Now, for the big accounts, there is some fairly easy money on the table for big accounts this week, and it all starts with Visa, guys. Visa, in my opinion, is one of the most no-brainer plays for large accounts. If you can't hold Visa, I don't know what you can hold in this market right now. They had fantastic earnings. We covered it on the channel, but the market just didn't care. Unwound the play anyways. That being said, we're getting very close to daily oversold conditions coming into the 200-day EMA, and look what we have here as well. We have a very nice area of support. So I'm a big fan of playing Visa down here, 330, but don't go too heavy because it could consolidate more. I'll probably be doing 1 or 2 contracts here and then a couple more down here in the event. For ever which reason, over the next 2, 3, 4 weeks, we come down further on Visa. I'll be playing it down there as well. All you need to understand is we're just into monthly consolidation. I love playing this one around the 12 EMA. I mean, in recent memory, guys, other than the bear market of 2022 and COVID, every time that we play Visa in around the 12 EMA, has it been a decent opportunity to play short puts? I don't know. You tell me. Just look at this chart on the long term, and it should be fairly obvious, right? That's stock number 1. And stock number 2, as part of that same line, is American Express. American Express had fantastic earnings and good guidance. You'll notice a common theme. A lot of the plays that I'm giving, guys, a lot of the plays, not all of them, like Chipotle, but a lot of the plays had good earnings. It's just the market did not reward them for those earnings, right? So I'm a fan of playing these companies that had good earnings, good guidance for the rest of the year, but just are somewhat unfavorable right now. That being said, American Express, same concept. We're coming down quickly here after their earnings, almost daily oversold into the 200-day EMA. And on the monthly time frame here, we have the 12 EMA as well. American Express for me, guys, mid 280s. I would not mind committing a bit of a position right there on American Express. If I had to choose between the two, I'd probably go for Visa because American Express is a bit more volatile, but I would not mind positioning in this company overall, right? A couple contracts here, and then the next DCA would be down here throughout the dip at around 260, but I'm a big fan of playing this initial attempt here at a monthly high or low for this company overall. So some pretty good bets here in the market to be taking overall this week. Hopefully you guys were able to find some ideas for trading. And of course, there'll be many more. We have so many earnings. Of course, AMD, after their earnings, if they come down, I'm pretty sure they'll have good numbers, but who knows? They might just come down, right? Just look at all the companies that have good earnings. They might come down. If they come down after earnings, and on Wednesday, I can find like the 150 strikes, I'll probably do that. Supermicro, if I can find like the mid 50 strikes, the area that we just left off from after earnings, that they just collapse here, and I can find like, mid 40s, low 40s, I'll probably do that. So just look for these earnings moves after they happen. Uber, same thing. If Uber comes down after earnings, I'll try to find some short puts here under 80, call it mid 70s. I wouldn't mind. So maybe some of these plays will be featured in next week's top 5 options videos after they've dropped. We'll see. But as of right now, I'm not playing them before earnings, only after, and same rules apply. Look for as low as you can get into a support area and get your 0.5% per week. So that's everything I had for you guys for today's video. Hopefully you guys enjoyed and were able to find maybe some trade ideas from that. If you were, consider dropping a like on the video. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We do these every Sunday in preparation for the upcoming week. And last but not least, guys, in the event that you have any questions on the strategy, please feel free to leave them down below in the comment section, and I'll be more than happy to answer you. And last but not least, in the event that you wanted to join a trading and investing community of almost 200 members where we trade this strategy every single day, but not only this strategy, guys, we trade a whole bunch of other option strategies for any markets, right? We can play some hedges, we'll play some leap call options, some call debit spreads, some credit spreads, all types of different option strategy, but we do focus a lot on the wheel. In the community, you get access to all my personal trades in real time. Here is the rundown from last week, and I'll show you some of the trades that we've been making over the past few months. The green check marks are wins, the red little circles are small little losses. You can see here that we take a decent amount of trades per week. There definitely is something for everybody in terms of different market strategies, but we also focus a whole lot on long-term portfolio building. You will see all the buys that I'm making in my long-term portfolios as well. And you also get access to our private morning live streams where I trade live every morning of the week. I live stream for about 2-3 hours after the open. I trade live, and you can ask me all your questions on your stocks, your options, your long-term portfolios in real time, and I'll give you a very long answer. If you're not there, they are recorded, so you can watch them afterwards. You can ask me all your questions in our chat rooms throughout the day. I have a whole educational section, guys, on strategies that I don't show so much on YouTube, called debit spreads, put credit spreads, leap call contracts, how to build long-term portfolios, technical analysis, fundamental analysis, a whole educational section, guys, for our Discord members in which they find a tremendous amount of value. And I also share all the watch lists. So all my watch lists that I use for various strategies and all my charts are available to you as well. You can just copy paste everything. It takes 10 seconds. You can copy paste all my watch lists. You can copy paste all of my chart layouts. All the support, the resistance boxes are there, and I update them often. And also all of these earnings revisions here and the estimates for fundamentals are also there on the charts. It's just an added bonus for our Discord members. In the event that you are interested, I would love to have you in there. The link is down below in the video description. And if not, I'll see you right back here on the channel. That's it for me. Have a great week in the market, guys. Take care. See you soon, and peace.